Uranium friends, let's check in on some big board individual minor names. We will start it off with CCJ, as it is, of course, kind of leading the pack here a bit. So I've got some lines on here that I've drawn. So the yellow deal is what is looking sort of like the diamond reversal pattern, which is exactly what it sounds like, right? It's got a little bit of a diamond shape to it, and it can be a reversal. That doesn't mean it is. Said it can be a reversal. I did post on Twitter the other day about the trend change for CCJ. So, low, high, higher, low, higher, high, higher, low. So it's doing some work here. And the other thing is that it's trying to push over the 12 EMA. Right, so there's a decent look, right? So the daily 12 EMA essentially has been rejection. Barring this crazy bounce, I forget what this was, but this was a news-driven wonky catalyst thing. But barring anything since January, the 12 EMA has been resistance, and it's starting to try to push its way over that. Okay, so good little sign. Like this doesn't mean it's actionable. Um, there's actionable stuff here for bulls, right? Because there's been a trend change, and it has formed yet its third higher low. So there are three levels that bulls can now work off of confidently to manage their risk here from the long side. So it's going to be this very low, 39.31. Your next higher low, which is 40, and then your next higher low after that, which is 41.42. So depending on aggression, depending on risk tolerance, there's options here for the CCJ player to go long and to be deciding what their risk tolerance is. You have three good levels to work off of, and then you could always go to the weekly and see what level you have to work off of, and that is going to be 40 right now. So the thing is that listen, despite that, and this is what we call nested time frames, right? So the weekly, it's just an inside bar, right? So in most traders' worlds, you don't mess with inside bars because you're going to get caught up in chop. But inside of that, we have a daily trend change. So not much in the way of follow through, but the higher low, the third higher low, is set for now. So we will see that. And someone responded to me about a possible rising wedge. And yeah, I mean, I guess you could say that there is the look of a possible rising wedge here with these blue lines. So there's a conflict. There's a lot of conflicting technical stuff, right? Pattern wise, right? So I don't always get caught up on the patterns. I say, where is my clarity? Well, my clarity is three higher lows in a row. That's where my clarity is. So those are the levels that I want to be working off of if I'm looking long. The shorts are going to be looking at this top here, this 43.84. And the next one, they're going to be looking at 44.75. That's the dynamic. And there'll be plenty of people who want to short CCJ into oblivion, right? So everybody thinks their contract book is horrendous, whatever. So we take a look at the monthly here, and the monthly is perfectly fine. But again, as I've said in the ETF video, we have to be aware of the possibility of a monthly head and shoulders that could possibly come into play on the next bounce. You have to be aware of those things regardless of whether uh, you're some sort of perma uranium bull, because you can be very, very bullish long term because everybody's talking about 2030. But the equities don't have to actually respond to what you think is very bullish. Maybe they don't care. Maybe the equities know something you don't. So just be aware of that dynamic. But CCJ is putting in some work here. Remains to be seen what happens with it, right? So just keep an eye on it. Denison, I just know, like, because Denison, I've always said 142 is my level. That I think is a very important level, and I can probably show you that level on this quarterly chart, right? So It's just a level that the name has interacted with since 2008. It's a big level, and it's dancing around that level again inside of this longer term value area. So, and it's trading below it, which I don't like personally, but a little bit of a uh, daily bull flag maybe. But again, everything is just doing the same thing in the sector, which is daily 12 EMA rejections for a very long time. All right, so that is for in my opinion, one of the key metrics that need to be overcome. You want to start using the daily 12 EMA as support. And this is why I say, like, I'm not interested in buying any of these falling knives. Okay. I don't care what valuations are. I don't care about the fundamentals. I don't care about F1 race car. I don't care about any of that stuff. I want to buy the right side of the V. All right. This is the right side of the V if it comes into play. Right. This is the right side of the V. Right now, we are still on the left side of the V. I don't want to be on the left side of I don't want to be buying in here. Everything, all buys in here without being really nimble and trading are just money being lost, right? And that much harder to get solvent again. Buys in here uh, have a much greater chance of success for getting back up here and managing risk. So that's the way I look at it with the sector in general. There's no reason for me to be jumping on these falling knives. There is nothing that is telling me, in general, in any name, that this is the turnaround. Right? A lot of conflicting technicals, a lot of chop, and just continuation. Right? So this is a waterfall move. Waterfall moves usually at some point result in fairly decent bounces, and they could be violent bounces, right? We just need to see follow through. So nice waterfall down here. What a recovery, right? So you kind of these are the things you want to see. So uh, you know, again, buying on the right side of the V, in my opinion, because all trend is lost. Now the trends are down in just about all these names. So no need for me to be jumping on a grenade, especially when I'm right smack in the middle of the value area that's been defined by this name for, I don't know, almost 20 years. Okay. So that's the way I'm looking at, and I mean, it's kind of losing this 142, which I've always defined as an interesting level. So that's Denison. A lot of the stuff I'm going to say is probably going to be redundant, so we'll be quick. Encore with some horrendous news got smacked, right? So these are great dip buys, but you got to be nimble and get out because it just round tripped it again. So everybody's like, "Oh, I'm buying, I'm accumulating." Okay, maybe you know better than me fundamentally, but the way I see it is this thing is on the edge of a cliff, literally on the edge of the cliff. Um, so there could be a little piece of support here where I've got this arrow in here in the 70 to 80, 70 cents to a dollar area. It could be some support here, but truly the next major support on this name is down here in the 30 to 40 cent range, right? And this is a major, major deal, right? So will there be an oversold bounce? Well, you got one on the daily, right? There's a beautiful oversold bounce. Gave it all back. The weekly, I'm sure, is oversold because everything was a dumperama. The weekly bulls are showing you that there is some support coming in, right? So there is some defense of this level that it tested way back when. There is some defense here. Interestingly enough, it's a little looks like a gap fill there too, huh? Yeah, I had a little gap here, so that probably got filled. Let's just see what's going on here. Yeah, just at the top of it. So, yeah. Um, again, I see no reason to rush on Encore either, right? I'd rather buy the right side of the V. Is this the right side of the V here? No. It's a 2-day move that gave it all back. So some traders got a good oversold bounce here. If I was paying attention, maybe I would have jumped on it, but it's Encore, and I don't try to really. Liquidity is tough on Encore, so. But it's not looking great. Encore. Let's see some reactions if it comes down to $1. But your big support is down here at this point. It's really not a lot of support for this name um, below here. So I would be careful personally from a technical standpoint. One should be careful with the name unless you have some sort of true fundamental conviction and insight on the name. But that's on you. It's not up to me to make those calls. Next gen. Everybody loves to hate this name for some reason, but looks to be holding up a bit better. Again, another key metric for the name on the monthly chart is lost. The monthly 50 EMA lost. Now using it as resistance. So if these things don't recover soon, um, there could be a long, drawn out process of this thing's. All the sector's still going down. I can't sugarcoat it. Although I want to. And look, the bulls have enjoyed a beautiful, beautiful trend for 5 years, right? 5 years. Um, Now maybe it's the bears' turn for a little while. So again, into this support area here. So for me, next gen, a key area. You don't want to lose 350. 350 is 350, 340 area. You got to watch it. There's all your volume profile. We're at the point of control here for now. But look at the hole, right? So this is where problems start to occur. These major breaks could take out a lot of stops, right? And the thing is, I can't even say, oh, it's retesting its breakout. It did that already. Here's your breakout. It broke out of this level, retested it already, and bounced. Um, Now it's coming back to test that area again. And once again, and this is going to be a recurring theme. It's just what I see on the charts. This one's not as much. It's really just like a triple top on a monthly. I was going to say that there's a bit of a possibility of a monthly head and shoulders. I bet you it's going to show up on a quarterly. Yep, it does. Right. So, um, possibility of a quarterly head and shoulders formation. We got to see the right shoulder and then see what happens there. But you sit there and go, "Oh, I'm not going to get in there." There's a possibility. This will be a huge bounce to make this right shoulder. This will be a big money making bounce. It could be a big. You can go from 350 to 8, right? Maybe even a little less. So I see 350 to, I don't know, 650. A $3 bounce. If you're buying at 3, you're basically getting 100% move there. So even though it's showing all of this bearish potential for the long term, doesn't mean you can't crush it on a short term, not really a short term trade because these are quarterly candles. So this move here, it could be a year of up move, and you can get 100%. So just because we have this look and I'm identifying this as a possibility, A, doesn't mean it's going to happen, and B, is not something to really get overly concerned about right now. And C, even if everything is bearish into 2030, this could be a beautiful, violent bounce where we could make a ton of money. So don't forget about that. All right, just keep that in mind. Just because I'm saying these things doesn't mean they're going to come to fruition, right? So this is a good support area, another good place for what I think should be. These should be bounce areas. The sector should bounce. It just depends on what's the bounce. What does the bounce look like, right? So I would rather see this type of action, right? Because this is how you build a base and you build support, as opposed to this type of action, these V shapes, right? Because then they don't build support along the way. This is the stuff I love to see, right? But it's got to catch its ride. There's a ton of work to do here, and I would bet this is a weekly inside bar. Is it? No, it's not because it's continuing to make new lows. So this is just a weekly stair step down. But and NXE is a stair stepper, right? So what do I mean by stair step? Every candle is a higher low and a higher high, right? Or a lower low and a lower high. So it's stair stepper. Stair stepper. Look at all these stair steps. That's what NXE does. And it sucks because it's tough to, you have to know the behavior of your stock. It's tough to sit there and say, I got to try to find a pivot before I enter. Well, guess what? You miss all of that. So understand the behavior of the instrument that you're playing. It's important, right? So it's stair stepping. So a signal could be, okay, once my stair step breaks, that's a good possibility of reversal, right? Stair stepping. So you keep an eye on those things. Again, I don't like this break of this monthly 50 EMA, and it's now being used as resistance. So I am literally looking down here as the next support area, and I want to know how it reacts. It's just that simple. It's unfortunate, but that's how it is. And these are the leaders in the space. I don't care what people say fundamentally about them. It is a big board, high liquidity option chain name. It is going and top holdings in most of the ETFs. It's a leader in the space, regardless of what your fundamentals are with CEO and all that crap. When's earnings coming? April, I would guess. May. So yeah, next gen charts are looking very similar all across the space, right? So you want to look for the standouts. It's probably going to be in the nuclear tech. So UEC, you know, same deal, right? So I call these the EMA squeezes. It's getting caught in between the shorter term EMAs, and it's just not decide. It's just trying to decide what to do here. That's the weekly look like. Weekly looks a little bit better. Still made a lower low. Still in waterfall mode. Still in stair step mode again with the UUEC. Look at these moves, right? Doesn't always give you a pivot to get in. So key levels are important, right? So bulls are probably working off of this level here because they've kind of lost this volume profile level here. So there are levels to work off of on this weekly chart. I would say, the monthly head and shoulders has a possibility of rearing its head. But we don't have to get too nutso with that, right? Um, the monthly 50 EMA ride is still in effect, right? And if you're if you're a moving average trader or someone who defines their risk tolerance with that, well, they're buying here. They're buying off this 50 EMA, and it's been fruitful for them since December 2020. That's what the 50 EMA is doing on a monthly for UEC. So take that as you will, but that's the way these guys are going. These EMA traders are going to be looking at that. So the quarterly chart doesn't really give us much in the way of information. It's really, for me, it's quarterly consolidation at the highs, still riding the 12 EMA. So UEC it's for longer term. It's a healthy looking chart. There's nothing wrong here. This level UEC for me to say, all right, this is a problem in UEC. I don't want to lose $4. That's just the way it is. The 4Us, I think I posted this the other day too, right? So UUUUUUUUUUUUU also has a daily trend change. It's got a better look with the EMAs trying to cross the 5 over the 12. This is probably one of the better looking bounces so far, in my opinion, only because you're building a nice little base here, and it's fighting. It's putting up a good fight. I think CCJ is close, but I'm almost inclined to say, let me just see this daily on CCJ. I'm inclined to say that UUU is a little bit better in that regard. So Pace to keep an eye on UUU. I mean, it's surprising to say that this looks like one of the better charts at the moment in the sector in the short term, but it is, you know, and it makes some sense in that, we're looking towards maybe looking towards United States producers and whatnot. So the weekly, the weekly took out last week's high. So this weekly high or low, this weekly low right now is set at 397. Um, Aggressive bulls are working off of that. That's a weekly low is being set. There's no follow through. It's easy to see that there would be a bounce up to like 480, 487, 475, somewhere in this area, right? So you have all this action at that level. You have this action at that level. You have the moving averages at that level. So a bounce up to here um, would not surprise me. It just becomes what is the result after that. What does follow through look like? That'll be that for these big board miners. And I'm trying to keep all these short. So, Devil, over and out.